Good afternoon, good evening, everyone, and welcome to Zdvisor. Nifty today at 22,500. At this point, there is no, percentage drop or the overall points down. It's just one figure. It has crossed the major support of 22,850 and currently at 22,500. To decode more about today's market, we have an expert in the house, Mr. Arjit Garg, a SEBI-registered research analyst. So, Arjit, firstly, I welcome you and thank you for your time.
Thank you for having me, Pradhaman. Let's go ahead and decode the markets real quick in this session.
Yes, please. Let's get started.
Okay, so to begin with, a very huge loss in the market today. Markets closed with Nifty closed with a loss of more than 2.5% with a loss of 600 points at 22,512. Sensex closed with a loss of again around 2.5% loss, more than 1,800 points, and we closed at 72,676. Every sector, every stock in the market was in red today. So there was absolutely no way that you could have made money in today's market until and unless you were smart enough to look at the open interest and trade the markets through options during the day. Otherwise, if you were going in blindly buying stocks based on the previous movements that we saw, on the Friday, we saw that we closed with a minor loss of a couple of points around, I guess we were down, what, 0.2%, 0.3%, and we closed at 23,136. Now, on Friday, if you would have bought any stock hoping for a gap up or hoping for a ceasefire, which was something which we were talking about on Friday, well, that did not happen. And now, most like your stop loss is triggered in almost all of your positions, right? So now let's talk about like what is really happening. Everything was good. There were no major news as such on the weekend. So what really happened? What went wrong with Nifty that we opened with a gap down of 2%? We were talking about 23,000. That 23,000 I guess, so maybe we can reconsider. 23,000 never came. In fact, 22,800 was breached within minutes of opening the market. So, what really happened? Let's decode it. So, firstly, the very first negative sentiment that came around and something that really messed up with the entire market situation is the ongoing Middle East war. Now, things escalated a bit over the weekend where the heads of Iran, Israel, the US, all of them, they initially they were going to negotiate, they were going to talk about ending the war. We even had a post by Donald Trump on Truth Social that he is now looking to de-escalate things and we are now going to end the war. But then that tweet on was on what, Friday evening, Saturday, and then on Sunday again things changed and things are escalating very quick. So they're now talking about nuclear stuff in the entire war. Now we all know that is not possible. Having a nuclear attack done on either of countries, that's simply inhuman. That's not possible. But just because we are now talking in nuclear terms that okay, if something goes wrong we'll do a nuclear attack, this is something which is concerning the market, because this, even if it happens, that will be very very serious for everybody, not just for markets but for economy, for civilization, for everything. It will be very serious. So this is the exact trigger, something which is triggering the market repeatedly again and again, which is exactly why we saw gap down. We continued the fall. We came down to this our discussed support level of 22,500. Below that, markets were trying to escalate. The markets were trying to come back up, but then just because the word nuclear is being referred in the Middle East conflict right now a lot, so now markets are like, okay, bro, we are not rising anymore. We are done here, and we'll stick to the support level, right? So that is the first major trigger which is driving the markets down. Second thing is the global sentiments. See, we talked about that global sentiments are very important when you look at your intraday market, or maybe when you want to understand how would the market be on the next trading session. Global markets is very important. Now, the very first market that we usually look at is the Asian market. So we look at Korea, we look at Japan. All of the Asian peers are down at least 2 to 3%. I'll simply load Korea Kospi, the Korea composite, and we can see here that Korea closed with a loss of 6.49% in a single trading session. Matlab, imagine Nifty, Indian market is down 2%, 2.5%. We are crying so much. Imagine what would be the scene for Korean people, for people who trade Korean markets. Or even worse, let's look at Nikkei, which is Japan's benchmark index. Japan, however, right now it's showing that it's positive. I believe this is the Japan Nikkei future which I have loaded. Hold up. Let me load Nikkei 25 cash. Oh, no problem. We can just Google Nikkei 25 and we'll see what their market closed. I believe, yeah, it closed with a loss of 3.48%. So all the indices in across Asia, now we are seeing that negative movement is very, very, subtle, and it's very seriously negative, the Asia. Even if we look at European markets, all the European markets are trading in negative as well. Be it FTSE 100, which is the UK's index, or be it CAC 40, right here it's also negative 1.8%. So broadly, all of the global markets that we talk about, they're all negative. And सीधी सी बात है, अगर ग्लोबल peers, हमारे ग्लोबल मित्र, ग्लोबल दोस्त, सब लोग अगर नेगेटिव हैं तो we will also be negative. So that's point number two, second reason why Indian markets are falling. Now, some of the other problems, some of the other reasons are quite serious. Gold and silver prices, we are seeing huge fall in gold every day. Even today, if I open up gold futures on MCX, yep, here we can see gold is down another 6% today at 134. Now this is futures price is something we discussed this earlier as well. Crude futures के लिए भी, we look at Brent crude, we look at Indian crude, we look at how the USD INR is doing, and then we really come to a conclusion that okay, what's going to happen in the markets next. So USD INR already at 94, it's lifetime low. Rupees weakening day by day, so that's another negative point. Gold silver is falling, that is also a negative point. Crude oil is again, it's touching new highs, it's around 9,600. Its previous high was around 10,000 rupees last week, I believe. So all of these triggers are together, all of them are coming and pulling our markets down. So broadly, yeah, these are the reason why we are seeing that the markets are constantly under pressure.
That is correct. That is correct, Arjit. And in fact, if we are looking at the advanced decline ratio for today, close to 3,000 stocks are on decline, and only 250, around 250 stocks are on advance, and 901 stocks are at 52-week low today.
Right, absolutely. There are more than, see, as I said, the markets are down almost every day. There's no way you can really predict which way your stock is going to go, because overnight things are changing. See, 2 days ago we were not even talking about nuclear. We never knew that this could escalate to a level that we might have to start talking about nuclear. And now that all of those dangerous terms are being used, there is absolutely no way you can predict which way the stock would go. And see, as the experts already say, you have to have good stocks in your watch list and you have to watch them consistently. Even in bad markets, your good stocks will do bad. Your stocks are good. Fundamentally, the stocks are good. IT stocks, we've talked about it multiple times. The valuations are absolutely perfectly comfortable right now. We have corrected at least 10-20% from highs. The AI fears are now being priced in. So IT stocks are good. Banking stocks are good. We talked about on Friday, we talked about HDFC Bank. And over the weekend, some new updates came around HDFC Bank, which were constantly updated on the Zdvisor app. So I believe HDFC Bank is good, SBI is good. You can look at a lot of NBFC companies. All of these companies are good. Fundamentally, these companies are good. But the timing is not right now, because all of the negative sentiments from global markets, they are all coming down to Indian markets. Nifty is falling, so these good stocks are also falling. So choose good companies, have them in your watch list, but let the market give you a reversal so you can start buying in those stocks and start, investing in the good companies at cheaper rates. So right now, it's not a good time to invest. It's not a good time to, start buying or have an overnight position anywhere, be it index, be it options, be it stocks. Overnight positions is something which you should absolutely avoid at this certain price point. But what you can do is watch our lives, mark the levels, and trade those levels as per the analysis which is being showing to you.
That is correct. That is correct. No, in fact, if you're looking at Nifty, usually when there is a big fall in the market, the last 15 minutes or say last 30 minutes, we see some kind of short covering. We see the market going up. But here, it's the opposite. Market tried to move up, and at the last half an hour, it came down even further. So, is this indicative of market going even further below 22,500?
Very good point. See, that's in fact, I would say that there's a very good analysis that you have, probably because you're already in the market for some time now. The last half an hour in almost in every trading session, now this does not happen in every session, but in most of the sessions, you'd see that the last 1 hour or last half an hour, particularly after 2:30 or after 3 p.m., you'd see that the market would start creating bullish candles where you'd start seeing short covering, as you mentioned, or you'd start seeing an up move, hoping for maybe a good day in the next trading session. But that is incomplete until unless you see the option chain. If we come down to the option chain, if we refresh that and we see how the option data, what the option data is telling us, we can see for any strike price below the current price, the current strike price is called at the money for your reference. Okay, any strike price below our current on the spot price, उसके नीचे जितनी भी price है, everywhere the put OI is higher. We have discussed this earlier. Put OI, if it is high, it means that put sellers are selling their option. Put sellers are there a lot. They're active in the market, and whenever they're put sellers, market usually goes up from that particular level. Right now, the at the money strike price for this current option, which is expiring tomorrow, is 22,500. At this price, we are seeing put OI is more than call OI, which means it's not for sure that this will happen, but it is indicating that 22,500 is the level which should act as a support. From here, the market should start rising to a higher level. And on the higher level, we are seeing 22,700, 22,600, and if you go even further, 23,000. These are the levels with one of the highest call OI, which means whenever the price would reach these levels, then again call sellers would get active there and the markets would come down. So we have a range automatically here. 22,500 is the level at which we are here. On the higher end, we already have the two levels. And for lower levels, according to option data, almost all the levels are good enough to act as a support. But we have to note the previous levels which we have touched previously. So I'll just quickly load up the charts and we'll see the historical levels. 22,300 is the level which we have marked. Now, ऐसा नहीं है ये level हवा में नहीं mark किया है. There is a reason why we have marked this level. The reason is, if you see here, somewhere around February, somewhere around April 2025, you remember these were the days when election was happening in India last year, right? Election time, उस time पे we saw huge volatility in the market. Every day there was a gap down, gap up, and exactly उसी level का जो support level है, the important level for those that particular day, it was 22,300. Now, if you can connect the dots here, anybody with decent technical analysis skill can tell you one thing. There is a very nice pattern forming here. This is first trend, which is a downtrend. Markets went up, touched all-time high, and now the markets are coming back down. Now, if this goes right, if the market takes support from 22,300, this can act as a double bottom pattern, wherein your first bottom was formed here during the election time, and your second bottom is now being created during the war time. If this acts well, if this goes in our favor, we can see a nice rally, but for that, we'll need to retest 22,300. That is an important level, important 22,300 to 22,100. That is an important zone for us. We have to retest that zone. If we do that successfully, if we do not breach it, if we just retest and we start rising again, I believe that would be the time to enter the market. That would be the time when this double bottom pattern would really start acting in our favor.
Got it. I totally agree with the double bottom, but also I see a double top as well. So is that a proper double top?
Absolutely. See, double top was there, but double top ka reaction is already there. I'll
Mhm.
show you the double top as well. This is the first top, and this is the second top. इसका reaction is already here. Double top का जितना नीचे गिरना था वो नीचे गिर गया already. Now the
Okay.
important part, again, the important part is the 22,300 to 22,100 ka range. If this double top pattern is really sustainable, if the double top is really going to work out, we really have to respect that 200-point range, because that is the support for this pattern to like prove successful. If we breach 22,100 or 22,300 right now for this particular week, then I think we can see fresh down move up till 20,500. But again, that is like the worst case. If you want to see the worst case, that is the worst case 20,500, which is the level that we saw here on December 2023. जो gap up मिला था, जो बाद में वापस retest नहीं किया, maybe we can go and retest that. But again, I repeat, that is the worst case. If this double top pattern becomes, if it's successful, 22,300 is breached, 22,100 is breached, then I think we can retest that level. But until then, there's this double bottom theory, which I really have a high conviction on. I think this should really work.
Got it, got it. Can we look at the sectors or the main stocks that took the major hit and some stocks that were positive even today?
Absolutely. So this is the sectoral क्या बोलते हैं, the heat map, जिसमें I can see only heat. There is no chilling happening in this chart here. The heat is the most worst performing sector for the day was consumer durables. Now, exact reason for why consumer durables took a major hit. Now, there was no major news for any of the sector, right? The only major trigger that we were reacting to today was firstly what's happening globally, and the second important trigger was uh, PM Modi addressed the nation today at 2 p.m. in Lok Sabha. And he gave a very good speech. But the most important part of that speech, the most important sentence that he said, which is again, it's making to headlines, is that he mentioned that the citizens of our country, they have to prepare for this Middle East war and its consequences the similar way we prepared for COVID. Remember the COVID days 2019-20, when we had the lockdown and we had to prepare for the worst thing which is going to happen? We mentally prepared, we physically prepared, have all the resources with you. Yes, he is not saying that things would go very wrong, but he is asking the citizens to be prepared for the worst. Now, some people might take this positively, some people might take this negatively. If you take it positively, it is good because you're being prepared. So markets would also be prepared for the worst. If anything good happens, we would see a huge uptick in a single thing. Not if just because it was a minor good news, we were prepared for worst. We were expecting much worse things to happen, but a minor good news is giving you a huge uptick. That is if you take this positively. If you take it negatively, you can also think that okay, this guy, our prime minister, is saying that things might get worse. Let's keep the market falling. Everybody would keep selling. The market would fall down to 20,500. That is if you take it negatively. So we do not know which direction the markets might go. What we know is the important levels and important patterns. So coming back to sectors, here are the top sectors that fell. Consumer durables, we had auto, we had banks. We had Nifty Bank was also down 3.7%. Realty, the construction and the realty part, it was down 4.7%. Private banks, chemicals, all the sectors were down 3 to 2.5%. Coming to stocks, here are the most top going stocks in the market today. We can see HDFC Bank was down 4.6%. A major news came in over the weekend, something around their Dubai branch that went wrong. So all of the things, the top three senior executives are also like they were fired in HDFC Bank ahead of Adanu Chakraborty's resign. So these are some corporate things happening in HDFC Bank. We also had ITC down 3.7%, Coal India down 2.7%. Almost all the stocks were down at least 2 to 3%. That this is what we can conclude here. There's no specific news apart from HDFC Bank. I do not believe there is any other major news for any of the stocks as such. But the only thing that is really pulling the market is the factors that we've discussed already. Now, there's one more thing that I want to discuss. It's about gold and silver. See, we know gold and silver, it is like pulling the markets down. But it's important to understand why is the gold and silver pulling the market down. So there's nothing much to it. There's just three to four important points which we should know as an investor. Like especially the users who are watching us, it's important for us to know the three important points. Number one, we already saw that the rupee is touching its all-time low. We are at 94 rupees against dollars. So dollar is strengthening, rupee is weakening. So that's a big negative. That's number one. Number two, crude oil is constantly increasing. Gold and silver, see, crude oil is increasing now. That again, since it's commodity, it impacts the price of gold and silver, right? So rupee is deteriorating, crude oil is rising constantly. FIIs every day there are fresh set of numbers for FIIs that are selling the markets, right? So I think FII selling is something which is important to see. Even if we see today's numbers, if it's visible, I believe FIIs have sold around 5,000 crores in today's market. Now, these numbers are not confirmed, so I cannot really screen share and show it to you. Once the numbers are confirmed, it would be shared on the app on Zdvisors. But these are
Uh,
the main reason. These are the main reasons why gold and silver are again they are underperforming, and this again is giving a cascading effect on why our Indian markets are falling.
Correct. In fact, like from the last 10 to 12 trading sessions, FI have sold close to 90,000 crore.
Exactly. Yeah, FIs are selling like there's no tomorrow. Now, there's another thing to why FIs are selling so much. See, in India, India is a country where almost all the FIIs are from either the United States or from its neighboring regions. We do not have any FIIs from Asia. We do have, but it's very less. Barely 3, 4% or 10% FIIs who belong to Asia and Asia Pacific. But 90% of our FIIs come from either Western Europe or the Western side of the world. Majority, 37 or 40% of the FIIs institutions are US based. Now, if they feel that everything which is happening across the globe is a big negative for India, they would keep selling. 30% of our Indian market that is in like 5, 6, 7 digit crores. So that's they have huge money, and if they keep selling the markets like this, I think the market would keep falling that way. Now, it is not that they have infinite money or they would just keep selling. They would start buying also. But for that, we need a positive trigger. That is something which we are missing. There are a lot of negative news across for gold, for silver, for our markets. You see, the US Fed, they're also saying that if the war continues, they might increase their interest rate, which is a big negative for commodities. You'd see that the US bond yields are at 5 month high at around 4.3% a month. So US bond yields are increasing, US Fed interest rates might increase, the dollar is weakening every day, and for sure, commodity mein there are already people who are booking profits. Gold and silver they touched all-time high, and humongous returns were given by gold and silver in past couple of weeks. So I believe profit booking is still active. All of the factors that we discussed are there, and these are the only exact factors that are driving our markets down.
Perfect. Ajit, we can close this session with mainly discussing the perspective or the mindset each different kind of investor should have. Let's talk about the long-term investor. Let's talk about the medium-term swing traders, and let's talk about the daily option traders too.
Sure. So this is something which I really like talking about. So intraday option trader, they would really want to make money really quick. They do not have patience at all. What they want is they would buy right now. They would want the markets to reward them very fast. Now, what they really miss out here is they miss out on stop loss. They know where to sell if the prices go up, but they do not plan for what will happen if the trade does not go in that direction. And this is where they make huge losses, right? So the ideology of an option trader is to like have the trade open in the morning and they want to close it in the evening by the end of the day, and they want that money, they want that profit to come in their trading account within that trading day. They do not have patience. They do not even have patience to wait for 1 hour. They would be like, okay, I've bought the option. For example, I've bought 22,500 call option. Now I've bought it at 80 rupees. I want this to become 160 within 1 hour. They won't wait for like for the entire day. Just wait, dude. At least let the market go up, right? So this is one problem that the intraday traders have. Now, with experience, with practice, with the right guidance, they do well. They learn risk management. They learn important concepts like trade position sizing. They learn all of these important parts later after experience, right? So these are some things that intraday traders do. If we talk about swing traders, or you say short to medium term investors, they would they brought they do not really care about where the market goes. They have their pattern set. They want the markets to reward them in 1 to 2 months. Now, what the major problem that such investors face is they over expect things from the market. Ideally, in short to medium term, if you have any stock, if you say you have Arise Life Sciences, or maybe just basic, you have Reliance Industries. Reliance Industries, if you see historically, you would barely see it giving you 5 to 10% returns. Now, I cannot load Reliance Industries on NSE. Yeah, I can do that. Right. So if I've loaded Reliance Industries chart here, it's on a 1 hour time frame. Now, based on my analysis on 1 hour time frame, I can very well take a trade for up to 1 to 2 months. That is a short to medium term duration. Now, what an ideal investor would do, an inexperienced one or a beginner, they would buy the stock over here at current market price, and now they would see previous high is at 1600. They would stretch this target to 1600, 15% returns in 1 month. Arey Baba, that's not possible. That's not possible for the stock to give you 15% returns in just 1 month, whereas the company is growing at 6%. So this is one problem that the medium term or short term investors face. They over expect from the market. Okay, this target might hit, but you need a lot of things to support this. You want the market sentiments to support it. You want the technical patterns. You want everything to come along and help that stock gain that momentum and help you reach that target. So what I would recommend, or what ideally people should do not over expect from the market. In 1 to 2 months, you can have maybe your previous lows. You can have 9%, you can have 8%, 5%. This is something based on technicals. You can mark these targets and you can expect the relevant results from the market. This is about short to medium term investors. If you talk about long term investors, now long term investing is something which is, I believe, the most difficult task for an average retailer, especially in India.
100%.
As I mentioned in the first point, people do not have patience. They do not have patience. They do not want to wait for that stock to give them returns. What they want is, अगर मैंने आज रिलायंस इंडस्ट्रीज खरीदा, ये स्टॉक आज लाइफ हाई जाना चाहिए, आज ये आई वांट ऑल द गॉड डैम मनी इन वन सिंगल ट्रेडिंग सेशन. That is now how it works. If you're buying it for the long term, then you have to buy it and forget it. Forget about it for like 1 year. You hear in the news that okay, the market is falling. Now when the market it's falling, this is not the time for you to panic. It's the time for you to come across, just participate in the market, just spectate what's going on, look out for good opportunities, buy that particular stock, average down, or just increase your basket to maybe have more multi-bagger stocks. How do you find multi-bagger stocks? You look at the fundamentals, you can look at the technicals, you consult experts that what do you think is the stock doing. So this is how I think long-term investors should behave. What they do instead, they would buy the stock from a long-term thinking. Okay, my goal is from long-term investment. I'll invest 2 3 years for 2 3 years in this particular stock. Within 6 months, they would take an exit. They would be like, okay, it's been 6 months, the stock is not performing very well. I've got 10 12% returns. 6 months is enough. I'll sell it. I'll buy some other stock. Are why, Baba? Why are you doing that? If you're investing in the stock, you are here for the long term. Stay in for at least 1 to 2 years. Let the stock tell you how the company is. Let the stock tell you what the actual growth is. Let the stock really give you the returns. You're just missing out on the returns just because you want to chase fast money and quick money. So for long term investors, quick money is not the solution. Invest in the stock, stay in it for long term. Let the quick money be in for intraday option sellers or option buyers. So yeah, broadly, this is what I think the perspective is for all of the investors, and the broad mistakes that I think traders and investors make in the investment journey.
Perfect. A perfectly detailed explanation, Ajit. Thank you so much. Today's session was honestly good. We covered all the major things and also spoke about the mindset for all kinds of traders. Thank you for your time, and let's reconnect tomorrow at 4 p.m.
Absolutely, thank you.
Thank you.